Well, first of all, we have our organic plans. So we are pushing digital exchange, investment in payments, investment in new products and services on the stock exchange. We are in the middle of a big integration. I'm really sorry. Between Switzerland and Spain. That is progressing really well. But on top of that, of course, we see that the market is consolidating and there are continuously acquisitions happening to make financial market infrastructure companies bigger. And to be competitive in this industry, you need to have a certain size. So we will be looking at acquisitions also, either be it in the data space or in the more traditional stock exchange space.
Jos, can I ask you about this other extraordinary phenomenon we've seen, the gamification of stock trading in the United States, and it's affected a few companies here on this side of the Atlantic as well. The Reddit, the Robinhood community. It's very easy for people who've been around the markets for as long as you and I and the rest of the team have to say it's just a sideline, it's just a phenomenon on the periphery. But is there any danger that this could come mainstream and these stunningly volatile and I would say dangerous for companies moves we're seeing could actually happen on broader exchanges such as yours with bigger stocks?
It goes without saying that next to fundamental company analysis, market dynamics, sentiment is playing a bigger role in people's investment decisions. And there will be people who will be purely on the receiving end of that, and there will be people who might try to influence the sentiment around certain shares and certain companies. And I think that will not go away that easy. But I think on the other hand, also the market usually has a lot of self-regulating mechanisms to deal with these kind of extreme volatilities. So I expect that to be normalized a bit in the future. But the sentiment trading on group behavior will not go away.
Now, I could be glib and say, oh, it's great for SIX. It's going to create some really nice volumes as well. But again, there is a big difference between this gamification and I guess the kind of people that you want to be trading stocks, i.e. investors who want to make, as you say, fundamental analysis and think about what they're doing as well. You say about the self-regulating mechanisms. They weren't there for a lot of these companies, and companies that are not that small as well. Are you sure that the regulatory environment we have across Europe and indeed on major bourses is sufficient to stop this kind of volatility and potentially manipulation, Jos?
Yeah. To stop is probably a bit of a strong word. I think it will normalize. And of course, we're all also, and all the regulators are also analyzing this case to see whether there are any changes that need to be made to the regulation. And if the conclusion from the analysis is that there will be changes required, then I'm sure the regulators will do that quite quickly. For us, having a fair and orderly market and really having a longer-term sustainable investment-based trading happening on our exchanges is extremely important. So we'd rather not see a more fair and orderly market with lower volume than this extreme behavior on the market, which I think is in the long run not good for the market.
Jos, let's talk about that a little bit more because we're setting up for the Fed today and markets are very much scrambling, waiting to get those trades on the back of just what Jay Powell will say. Are you concerned that investors at this point are overly fixated on inflation fears?
Well, again, you'll have to ask the investors. I think inflation has not been there for such a long time that with slight movements, people react quite in a knee-jerk way. So we'll have to see how things are evolving in the longer term. And I'm curious to hear also what the Fed will say today.
And just on the issue of equivalence and the UK that you mentioned earlier, what is your expectation in terms of the amount of business you're likely to see now on the UK exchange? Yeah,
like I said before the recognition between the UK and Switzerland, we had 100% market share. Now with the UK alternative platforms opening up for trading of Swiss shares, we've seen in the first couple of months that from 100%, we've now moved to like 80% market share. We used to have 70% before this whole non-equivalence happened in June 2018. So we expect to land somewhere between 80 and 70. We hope to stay closer to 80 because the market has seen that the spreads, the liquidity on the Swiss exchange are extremely good. So we also think that some of the people that have moved from MTFs to us forcefully because of equivalence will now stay with us and that there will be some stickiness. But somewhere between, let's say, 70 and 80, and then on the higher end, hopefully closer to 80 for us.